An overdraft occurs when money is withdrawn from a bank account and the available balance goes below zero. In this situation, the account is said to be overdrawn. If there is a prior agreement with the account provider for an overdraft, and the amount overdrawn is within the authorized overdraft limit, then interest is normally charged at the agreed rate. If the negative balance exceeds the agreed terms, then additional fees may be charged and higher interest rates may apply. History. The first overdraft facility was set up in 1728 by the Royal Bank of Scotland. The merchant William Hogg was having problems in balancing his books and was able to come to an agreement with the newly established bank that allowed him to withdraw money from his empty account to pay his debts before he received his payments. He was thus the first recipient of cash credit from a bank in the world. Within decades, the advantages of this system, both for customers and banks, became apparent, and banks across the United Kingdom adopted this innovation into service. With the onset of industrialization, new businesses needed an easy form of credit to jump-start their activities, without having to take out loans on securities they didn't necessarily have. The importance of this new financial innovation was recognized by the philosopher David Hume, who described it in one of his essays as one of the most ingenious ideas that has been executed in commerce. Reasons for overdrafts. Overdrafts occur for a variety of reasons. These may include intentional loan. The account holder finds himself short of money and knowingly makes an insufficient funds debit. He accepts the associated fees and covers the overdraft with his next deposit. Failure to maintain an accurate account register. The account holder doesn't accurately account for activity on his account and overspends through negligence. ATM overdraft. Banks or ATMs may allow cash withdrawals despite insufficient availability of funds. The account holder may or may not be aware of this fact at the time of the withdrawal. If the ATM is unable to communicate with the cardholder's bank, it may automatically authorize a withdrawal based on limits preset by the authorizing network. Temporary deposit hold. A deposit made to the account can be placed on hold by the bank. This may be due to Regulation CC or due to individual bank policies. The funds may not be immediately available and lead to overdraft fees. Unexpected electronic withdrawals. At some point in the past, the account holder may have authorized electronic withdrawals by a business. This could occur in good faith of both parties if the electronic withdrawal in question is made legally possible by terms of the contract, such as the initiation of a recurring service following a free trial period. The debit could also have been made as a result of a wage garnishment, an offset claim for a taxing agency or a credit account or overdraft with another account with the same bank, or a direct deposit chargeback in order to recover an overpayment. Merchant error. A merchant may improperly debit a customer's account due to human error. For example, a customer may authorize a $5 purchase which may post to the account for $500. The customer has the option to recover these funds through chargeback to the merchant. Chargeback to merchant. A merchant account could receive a chargeback because of making an improper credit or debit card charge to a customer, or a customer making an unauthorized credit or debit card charge to someone else's account in order to pay for goods or services from the merchant. It is possible for the chargeback and associated fee to cause an overdraft or leave insufficient funds to cover a subsequent withdrawal or debit from the merchant's account that received the chargeback. Authorization holds. When a customer makes a purchase using his debit card without using his PIN, the transaction is treated as a credit transaction. The funds are placed on hold in the customer's account, reducing the customer's available balance. However, the merchant doesn't receive the funds until he processes the transaction batch for the period during which the customer's purchase was made. Banks do not hold these funds indefinitely, and so the bank may release the hold before the merchant collects the funds, thus making these funds available again. If the customer spends these funds, then barring an interim deposit, the account will overdraw when the merchant collects for the original purchase. Bank fees. The bank charges a fee unexpected to the account holder, creating a negative balance or leaving insufficient funds for a subsequent debit from the same account. Playing the float. The account holder makes a debit while insufficient funds are present in the account, believing he will be able to deposit sufficient funds before the debit clears. While many cases of playing the float are done with honest intentions, the time involved in the checks clearing and the difference in the processing of debits and credits are exploited by those committing check kiting. Returned check deposit. The account holder deposits a check or money order and the deposited item is returned due to non-sufficient funds, a closed account, or being discovered to be counterfeit, stolen, altered, or forged. As a result of the check chargeback and associated fee, an overdraft results or a subsequent debit which was reliant on such funds causes one. This could be due to a deposited item that is known to be bad, or the customer could be a victim of a bad check or a counterfeit check scam. If the resulting overdraft is too large or cannot be covered in a short period of time, the bank could sue or even press criminal charges. Intentional fraud. An ATM deposit with misrepresented funds is made, or a check or money order known to be bad is deposited by the account holder, and enough money is debited before the fraud is discovered to result in an overdraft once the chargeback is made. The fraud could be perpetrated against one's own account, another person's account, or an account set up in another person's name by an identity thief. Bank error. A check debit may post for an improper amount due to human or computer error, so an amount much larger than the maker intended may be removed from the account. Some bank errors can work to the account holder's detriment, but others could work to their benefit. Victimization. The account may have been a target of identity theft. This could occur as the result of demand draft, ATM card, or debit card fraud, skimming, check forgery, and account takeover, or phishing. The criminal act could cause an overdraft or cause a subsequent debit to cause one. The money or checks from an ATM deposit could also have been stolen or the envelope lost or stolen, in which case the victim is often denied a remedy. Intraday overdraft. A debit occurs in the customer's account resulting in an overdraft which is then covered by a credit that posts to the account during the same business day. Whether this actually results in overdraft fees depends on the deposit account holder agreement of the particular bank. United Kingdom. Overdraft protection in the UK. Banks in the UK often offer a basic overdraft facility, subject to a pre-arranged limit. However, whether this is offered free of interest, subject to an average monthly balance figure, or at the bank's overdraft lending rate varies from bank to bank and may differ according to the account product held. When a customer exceeds their authorized overdraft limit, they become overdrawn without authorization, which often results in the customer being charged one or more fees, together with a higher rate of lending on the amount by which they have exceeded their authorized overdraft limit. The fees charged by banks can vary. A customer may also incur a fee if they present an item which their issuing bank declines for reason of insufficient funds, that is, the bank elects not to permit the customer to go into unauthorized overdraft. Again, the level and nature of such fees varies widely between banks. Usually, the bank sends out a letter informing the customer of the charge and requesting that the account be operated within its limits from that point onwards. In a BBC whistleblower program on the practice, it was noted that the actual cost of an unauthorized overdraft to the bank was less than £2. Amount of fees. No major UK bank has completely dropped unauthorized overdraft fees. Some, however, offer a buffer zone, where customers will not be charged fees if they are over their limit by less than a certain amount. Other banks tend to charge fees regardless of the amount of the level of the overdraft, which is seen by some as unfair. In response to criticism, Lloyds TSB changed its fee structure. Rather than a single monthly fee for an unauthorized overdraft, they now charge per day. They also allow a grace period, where you can pay money in before 3:30 p.m. before any items are returned or any bank charges incurred. Lloyds TSB allows their customers, if they have gone into an unplanned overdraft on a Friday for example, to pay money in before 10 a.m. on Monday morning and the daily fees for the weekend to be waived. This, however, does need to be cleared funds. Alliance and Leicester formerly had a buffer zone facility, but this has been withdrawn. In general, the fee charged is between £25 and £30, along with an increased rate of debit interest. The charges for checks and direct debits which are refused due to insufficient funds are usually the same as or slightly less than the general overdraft fees, and can be charged on top of them. A situation which has provoked much controversy is the bank declining a check, direct debit, levying a fee which takes the customer overdrawn and then charging them for going overdrawn. However, some banks, like Halifax, have a no fees on fees policy whereby an account that goes overdrawn solely because of an unpaid item fee will not be charged an additional fee. Legal status and controversy. In 2006, the Office of Fair Trading issued a statement which concluded that credit card issuers were levying penalty charges when customers exceeded their maximum spend limit or made late payments to their accounts. In the statement, the OFT recommended that credit card issuers set such fees at a maximum of £12. In the statement, the OFT opined that the fees charged by credit card issuers were analogous to unauthorized overdraft fees charged by banks. Many customers who have incurred unauthorized overdraft fees have used this statement as a springboard to sue their banks in order to recover the fees. It is currently thought that the England and Wales county courts are flooded with such claims. Claimants tend frequently to be assisted by websites such as the Consumer Action Group. To date, many banks do not appear in court to justify their unauthorized overdraft charging structures, and many customers have recovered such charges in full. However, there have been cases where the courts have ruled in favor of the banks and alternatively struck out claims against customers who have not adequately made a case against their bank.